Bob, welcome back to Face. How are you?
Good, good. How you doing?
I'm doing okay. Do you have anything you want to share today while we're
Nothing like
talking?
nothing like watching your asset class go in the tank right before an interview.
Okay. Well then you just answered my question. Are silver squeeze people becoming so discouraged that we might be getting closer to, a very important buy zone? What do you
Yeah,
think?
I see that. I see that. I talk to people in the industry. The physical activity has really slowed down. It started basically back in May and June. I guess really June is when it started to kind of see some serious slowing. And then as you went through the summer, which typically in the precious metals business, it gets pretty slow during the summer. It's just the vacations. And then you also have in Europe, a lot of refineries and workers go on vacation as well. So you don't have as much activity. Very normal, nothing out of the blue. But I think what we've seen is, at least within the industry, premiums have come down pretty hard across the board. And I think you saw, there probably
And
dealers
a
out
nice
there.
reversal in gold right now. We're down to
Yeah,
1905.
yeah,
Dollar is fading a little bit here too. Go ahead.
yeah. If you want to look at something kind of interesting, I don't know if you can pull it up, but the gold volatility index (GVC), it's a
Yeah.
golf Victor Zebra.
Okay.
Uh,
Let's see if I
th-
have it.
this is
See,
back.
these were things you're supposed to bring.
Oh, sorry.
You want to talk about something. No,
Yeah,
I don't
yeah,
have it.
just GVZ, just
Oh,
Golf Victor Zebra or Zulu. There you go.
okay. Let's see. I only get it delayed, but
No, that's
that's
fine.
okay.
I'm more interested in the longer term chart. It go back 10 years, something like that. We're back to levels that we saw in 2018, 19, where gold was 1,200, $1,300 an ounce. That so that volatility. I mean, it's the old adage, never short a dull market.
Yeah.
And we're getting dull. I mean, and you're absolutely spot on with sentiment. It's, you don't see as much interaction on like social media, Twitter, that type of thing. People are, they're getting tired of the mantra from a lot of these physical precious metals dealers that, the bricks currency, gold, gold back this, gold back that. Though there's a lot of that that's trying to hang on a thread, trying to keep people interested in the marketplace, but there just isn't a lot of news. This is an asset class that's really driven a lot of times by events, especially the last 3 years, and there just hasn't been much. It's just is not that. It's kind of like we're in the middle of this, like the eye in the storm. It's just very calm right now.
Okay. So, how do you think silver is going to be affected when they roll out the CBDC?
I mean that the CBDC, I guess, I don't know. I haven't read really much about. There's the Fed Now program, but that's more bank to bank. That's not necessarily, you get some type of debit card or something like that, or electronic card from the government, and they control your wallet at that point. But I would imagine if you get anything going down that road, that's a more, you can look at that as big brother, fascist type of, that's the worry and concern that you start to see with monetary controls, where you start to say, well, if you don't agree, it's like, being supporting the truck drivers in Canada, you basically get your account turned off. So that would bring people to an asset class that is sort of bearer and instrument, that provides some degree of independence and ability to transact without relying on the system. That would be helpful for the physical metals, no doubt.
How's it going to help you in a system where you have to be in the system? What's going to be the purpose of silver? Strictly a dollar hedge, or can you see it being used as barter?
Well, barter, you still can collateralize. I mean, that there's Yeah, I think a lot of people in the physical world, a lot of investors may not understand. They point to the word manipulation a lot, but in the physical metals market, there's a lot of industry that will finance and use gold and silver for, just like they do any other type of financial instrument. So and I think that's where we're seeing some of this. Tokenization and that type of thing, where maybe it becomes a little bit easier to begin to tokenize physical metal, and then use that as collateral for something else. That might be one of the evolutions of the metals going down this digitalization, I guess you could say. Not that it's good or bad. It's just banks and any type of trading institution will find ways to use assets to generate trading fees. Basically, it's the old Wall Street adage. They make money on the movement of money, not necessarily sitting on money. So that might be something down the road that gold and silver become an instrument that maybe is a little bit more involved. Something I would like to see, definitely, because I think the problem I see in the industry right now, especially the last 3 years, a lot of people who bought the metals are really underwater. I mean, the premiums have been so high that you're looking at $35 plus for a lot of people just to break even. Based on all the premiums that they've paid for the product and so forth. So that's something that I think it's changing. I think the last 4 or 5 months, people are they're not jumping into the fray and paying these high premiums. They're more sensitive to that fact, and they're saying, listen, this isn't the insurance policy I was sold that silver's going to 200 in 6 months, and gold's going to go to 3,000 or 5,000. Now that hasn't happened, so people are pulling back. And then you also have a lot more competition with the metals right now, because you have interest rates 5.25%, 5.5% on T-bills and things like that. You have alternatives to go at, and
I just listening to you, I am getting so bullish.
yeah, totally. Well, I mean, that's why I keep pumping out this information on Twitter. It's like I'm going backwards in time.
You sound so frustrated that I really can't wait for 2040 silver.
Yeah.
So anyway, we could have a rally here if the dollar relents for a little bit, but I think there are major buying opportunities coming in both silver and gold. I still think gold's going to take out this 1882. But I saw a few tweets that were interesting last week. You were talking about lease rates in gold, where you hypothecate gold position, that lease rates had doubled. That was
Yeah,
you, wasn't it?
yeah, borrowing rates. That's basically,
Yeah.
when you go to short a stock, for example, what the broker dealer will charge.
Yeah.
And you look at these. What I like to do is try and look at the breadcrumbs everywhere and try and see what I can find that may be giving some inkling of direction or sentiment, or some type of you're getting into some sort of extreme, or something that you can fall back on based on history. And you see these borrowing rates start to jump a little bit. It was telling you the market was getting short, and then we got this short covering bounce that we saw. But what's happening is these players are trying. It seems like it's all in the paper markets. The physical market's fairly quiet, but the paper markets is what's bouncing this thing up and down like a yo-yo. You're having CTAs taking positions, going short. That doesn't work out because they can't get the volume follow through. Then they cover, and it bounces back up, and then it's wash, rinse, and repeat all over again. That's what's happening. From a long-term perspective, a guy like me that buys physical, and a lot of investors, this is just noise. I mean, whether you buy it at 20 or 22 or 24, it from a long-term perspective, I don't think it's going to matter, because right now a lot of primary silver producers are losing money or just breaking even at $22, $24 an ounce. I mean, it's the industry is seeing a lot of pain right now, and you see that with the mining stocks. You probably go through that on your charts and that type of thing. I mean, it's not a very easy market for the I guess the investor side, because there is a lot of frustration, because the price of the underlying commodity just can't get out of its own way.
I'm looking for one more low in AG around $5 for a third drive to a bottom completion. Yeah, a lot of these juniors are pressing the lows right now, and that's with silver still way off the lows. So you're right.
Exactly.
The miners are suffering. This one may not make a new low. I may buy some next week or so, 250, and even the gold. The blue chips look okay, but I still think they could work lower towards this 25 level, 24. But we're
Well,
getting closer to what I think is going to be an inflection point, and the inflection point's got to be the dollar. I mean, gold could rally with a strong dollar. It can do that dance. Silver cannot. Silver needs a bear market in the dollar. So we need to finish off this rally in the dollar before you're going to have any bull market action in silver. And we're getting closer, but I don't think we're there yet. I mean, I think 108 is viable before this dollar peaks. So, silver did well here, right? From last October, that was a falling dollar. Silver needs a bear market in the dollar to do well. Historically, that's the case. So that's what you have to be watching if you're a silver trader. You trim your long positions when the dollar's a wrecking ball. So the wrecking ball still could keep swinging for a while. Yeah, you talked about even in the ETF SLV that, just like the lease rates, borrowing rates went up in gold, um, there wasn't as much SLV stock to short as
right.
there was. What about that?
Well, that's where it gets kind of interesting because you've been seeing as the price has been pulling back, or even if the price has been rising on silver, you've seen a lot of shares, I guess, being redeemed, and so you've been seeing a lot of metal leaving the SLV, and at the same time, you've been seeing the short interest trying to come into the market and short it down. This is obviously we don't know who the players are. I wish I was a fly on the wall and I could figure out what's going on, but you don't know if it's the authorized participants trying to deleverage their book, so to speak, and the metals are just part of that book, or if it's institutions just getting washed out and just walking away, like you said, with the dollar rising or interest rates going up. They're playing the playbook, like the same thing they played last year with selling the paper down. The problem we have, I think, right now is the physical market. India saw a massive amount of buying last year. This year, it's just been dead, and you just don't have any. You don't have any demand that's supporting the market. Frankly, it's you look at the demand out there, you look at the action. I'm surprised that silver is even where it's at right now. I mean, this is actually a fairly strong sign for it to be where it's just sitting in a real tight trading range, going bouncing along between 22.5 and 25. Normally when you start to see when you get stuck in a trading range and an asset goes up and down, very very quickly and but stuck in that range, it usually is a tell sign that it's about to leave that range. There's some sort of action that's happening. People are trying. It's like a tug of war that's beginning to develop. So obviously, I think you're seeing probably some type of low being formed here. I mean, you're not seeing it'll be hard to see paper really follow through to the downside and short this market and break it down, because the mining stocks, the miners aren't making money here. They're just going to run production down is all they're going to do if they break the market. But that's why I buy the physical, because I'm not trying to rely on the management and the operations of a mining company, because you have so many more risks with regard to that. You're just watching the metal prices, and like you said, over time, if it mirrors the dollar, if it mirrors interest rates, or economic activity, or some type of geopolitical event, or something of that nature, or just solar or technology, or something that gives silver some type of reason to catch the investor's eye again. the physical market is still very, very small. It doesn't take a lot to come in and start scooping the stuff up. And oddly, you saw some metal come onto the exchange a couple weeks ago about I think it was like 14 million ounces of silver. Yeah, that could just be basically refiners and some of the authorized participants or players that have a book of silver. Nothing's moving right now, so they're putting it onto the exchange, selling a December contract against it, making some spread off of the between the spot and the December futures, just to get some sort of cash flow and reduce their carrying costs.
Aren't there many gold miners that at current prices were way above production costs?
Yeah, I think the production costs have been rising. I think on some of the big ones like Newmont. I think they've been rising up towards closer to $1,700 an ounce.
Is that because of energy prices going up?
Yeah, energy. I mean, you got the strike that's going on in one of the biggest mines in Mexico right now. That's costing them $3.5 million a day, which actually turns out that's one of the largest silver mines in the world, actually, and that's been halted because of a massive labor strike. So these mining companies are getting hit. As cost of living has been going up in all these countries.
Is this it, Bob? Fresnillo?
No, well, Fresnillo is another big one. I mean, you look at the long-term chart on that; it's like, ugh.
I
But
mean,
Newmont,
this is the one. This is the one that that Mexico owns. It's state-owned, isn't it?
I'm not sure on that side, but Newmont is the one that that they're. I don't have it offhand the name of the mine itself, but Newmont Mines is
Okay.
the one that you want to look at, and that's been that's that's the biggest guy in the block. And you look at the long-term chart on that thing, and it can't get out of its own way. I mean, it's telling that there just is not a lot of interest from institutions into this group.
Look at where it's coming to on this monthly. I tell
Oh,
you what, you've given me a lot of ideas during this interview.
Oh,
Because I wouldn't have pulled this up. This monthly level in Newmont is really important. Look left. If you're a trader, you look left, right? So you look left, it was a pivot here, it was a pivot here, it was a pivot here, and we're approaching it again. So I don't know. I think the $35 Newmont 36 looks pretty good for a long.
Yeah, yeah. I mean, but that's that. I mean, these mining companies have given up almost all of the gain from 2020's lows. I mean, a lot of them. I mean, there is a lot, sentiment is horrible right now across the board in the industry. So,
yeah.
But that, like you said, from a contrarian standpoint, that is what you want to see. And that's what I try to tell people as part of investing in this asset class. The highs are great, but the lows, and they make you wish you never bought this stuff. I mean, but that's just the way the industry works, or the asset class works.
That's when you have to add on. Let me, Bob, you do store the physical metals. People could buy metal from you all, across the board, gold, silver, platinum. What do you think things will be like? I keep thinking about next year we could have one candidate being impeached and another one on trial. I mean, how do people know that they're ever going to be able to get to the gold that they have stored anywhere outside of their house if things deteriorate?
Well, you don't even need that to happen. I mean, look at COVID when that happened, and a lot of facilities were inaccessible, for a short period of time. I mean, it doesn't necessarily take a political event to create disruption or chaos. It may just take some type of economic event, and that's one of the reasons why I started a depository, because I looked at all these risks that we have out there. The potential of some type of executive order or that type of. But I don't really. The metals have been really disengaged from the monetary world for some time. So I don't really see them going after the physical metals. There's really no reason to it because the public doesn't, most of the public doesn't have any physical metal whatsoever. But the advantage that I've kind of looked at and what made me different is that we're the only depository in the country that's not owned by a gold dealer or financial institution or like a cash in transit company like a Brinks. So we are purely a storage company, and then from the metal side, when I buy and sell metals for clients, I do that as a subsidiary of my registered investment advisory company. So I call myself a purchaser representative. So I don't act like a dealer from a standpoint of these massive markups that you've been seeing, especially the last 3 years. I've really kept those premiums as low as possible, and I put all the prices right on our website. So you just go right into the buy metal section, and it'll show you what the premiums are over spot. And so you can see that my concern is making sure people have the opportunity to make money when they buy this product, not necessarily make me money as a dealer. And that's been a very frustrating thing. I've talked to so many people over the last 3 years that just feel like they don't want to come back to this asset class because they had just had a very bad experience.
They got
realized,
ripped off on,
yes,
ripped off on spreads.
yes,
So,
big time.
okay.
Yeah.
Well,
And on top, yeah.
Go ahead.
And on top of that, the premiums have collapsed. So, so these dealers that were charging $18 over spot, $20 over spot for Silver Eagles, now the bid's like $2 or whatever it may be. I mean, so that's not something they're going to be able to overcome anytime soon. And people are learning that, the mantra of the dealer, of a lot of these physical dealers, of fear mongering and telling you that this is an insurance policy and getting you convinced that you're going to pay whatever you can to get that insurance policy. People are realizing, wait a second, this is just another asset class. It provides sanctity, in times of uncertainty, and that's really one of the roles of the metals.
Okay. Well, you're getting a rally in silver today from these lows, Bob. Maybe we at least get some type of bear market rally. I'm not sure this is it yet, but
it would be interesting to see if we get an outside update here.
Yeah, so we'll see. Here's a little more of a shorter term view. So it's tried to break down. It's not. Looked for stops here. Probably going to look for stops over 23.20 now, and get some type of fib retracement of this recent decline. So
what do you? I mean, you've been in the business obviously a very long time, but when you get caught in this sort of trading range sort of trap, that we're kind of seeing in the middle. So there just isn't. The underlying physical market really not reacting. This is all CTAs and positioning, whether it's adding or to length or adding to the short side, or reducing when things don't go their way. When you see this sort of pattern of choppiness and start to do you see this base where it explodes out of it, or do you see it sort of wherever direction it goes, it just starts to grind in that direction when it finally breaks out?
Well, I was bullish down here looking for 24. It exceeded my expectations. I got out early, and then I got short up here. So it doesn't matter to me. I trade it.
Mm-hmm.
So I'm more tactical, but I also have a longer term view, and that's here on the weekly. Looks better on the daily here. That we're good. There's a harmonic pattern that takes it down to this 2040 level. I have a couple of hits here, and that would hold these lows made in March. But the shares will be making new lows, and people are already fed up here. Can you imagine how fed up they're going to be? $2 lower, huh? 250 lower from here. So that's where I back up the truck sometime this fall.
Mm-hmm.
That's my strategy.
And I think that it's important because I get a lot of people that that'll ask me like DMs and that type of thing on your views when you look at the markets from a trading tactical standpoint versus a longer term investment standpoint. Maybe you could kind of give, because there's some people that may follow me that doesn't follow you as much and understand your positioning, and maybe you could kind of explain, when you make these calls, they're like, my God, I thought he was long, or he was long term, bullish. Now he's looking for, complete washout. yeah, it's more of a trading side for you, just not necessarily.
I think this will be the last washout. I've already told people that I work with that after we get down here in silver and we get down here in gold, if we do, that I won't trade the short side of the precious metals market for 2 years after that. I might be tempted to, because I'll see, nothing goes straight up without corrections and nothing goes straight down without bounces. But that's the end of my bear hat in the precious metals this fall. So I won't be confusing your people. I'll only be buying breaks.
Well, and it's interesting because I put out a tweet, like kind of a thread. I looked at the 2008 low in the silver market, and you're seeing a very similar pattern of these series of inverted head and shoulders and this sort of walking up the wall of worry that you saw back then. And in 2010, 2011, when the thing started to rev up, it was really more on the short side of the hedges that were blowing up that started taking silver straight up, not necessarily the physical market. So it's almost the same thing happening all over again, where people are, the paper side is not trusting at all, and they're looking at it from the traditional interest rates are going up, so let's short the metals, or the dollar is going to go up, that type of thing. But that can catch a lot of people off guard.
Well, the record short position in gold that everyone's been talking about tells me one thing, that the type of bottom we'll get will be a spike in nature, where you'll have a huge decline intraday, and it ends up like what you're looking for in silver, an outside day to the upside, because shorts are going to come out of it quickly. So I'm looking for a spike low. It'll be like a key reversal type of day is what you could look for to, to have a very good sign that the low is in.
Right.
Shorts will have to scramble, and I have to scramble here too. So best way for people to get a hold of you and discuss it. Everyone, if you're a physical silver buyer, check out Bob's prices. Make sure that you're getting good deals. He was giving tight spreads when people were charging, $10, $15 over spot for silver rounds. So give Bob a chat. Where can they find you, Bob?
Our website is goldsilvervault.com. And then on Twitter, it's Profits Plus ID, Idaho. So feel free to follow me on there. We'll try to put out some pertinent information, at least things for people to kind of watch and consider. I'm not a big fan of fear mongering and just throwing a lot of clickbait out there. I try to help people along this entire journey, just as much as we're all going through this together. So, no one's going to be absolutely perfect in this market. I've learned that over 30 years that, you learn to be humbled. No matter what happens in the marketplace, it never goes your way right away, or sometimes you do get lucky. So, but no, I appreciate the opportunity to be on here. And I definitely, anyone that's, that's new to listening to Dale, it does a great job of analysis, technical analysis, watching the charts, and just brings a lot of market experience with him.
Thank you, Bob. So I hope you have a good fall. The silver low will be here this fall, and everyone, I'm going to take partial profits on the end short from 60 after the CPI number. Remember, on every trade you're out there, take partials. You have to get paid to make a living. And you could join the team in 12 minutes on the morning edge, and we'll see everyone tomorrow. Don't just count your pips, count your blessings. Adios, everyone. Thank you very much, Bob. And I'll talk to you in the winter.
Sounds good. Thank you, Dale.
No, you know what? I'll talk to you in the fall, because I'm going to buy physical. When I go into some more physical, I'm going to be stacking. So thank you, buddy.
Sounds good. Thank you.
You'll hear from me. Adios, everyone.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.